The following is a presentation of TFNN.
The TFNN Bull Bear Trading Hour. Every trading day live at 10 a.m. Eastern Time. Call now toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 71. Nasdaq is off 35. S&P's down 9. Gold contract trading up $1.50 at $12.25 an ounce. You get silver down 5 cents, $14.27 an ounce. Light sweet crude up $1, $51.33. That light sweet crude's had quite a night, hasn't it?
We were under $50, 49 and change.
It's moving. Notes and bonds, folks, are the story. You get the 10-year note up 6 ticks, 119.18. 30-year bond up 11, 140.09. Last 2 days, bottom line, they've been buying hand over fist since Monday. It's almost like someone knew what Powell was going to say, because we did 3 million contracts in the 10. Now what you have, you've taken out the swing, you have monster volume once again. These things are going higher. We got the 10 under 3% for about an hour this morning.
Okay.
King dollar up 154 ticks, trading 96,835. Now King dollar came down hard and fast as soon as Powell's speech came out yesterday morning. What we're going to have at 2 o'clock, volatility is not going to stop, because at 2 o'clock, folks, the minutes from the November 8th Fed meeting are going to come out, and we're going to get more action. Euro's at 113.67 to $1 US. The yen is trading at 113.35 to $1 US. And we talk action, folks. We talk defined risk. We talk options, option strategies, every trading day right here. Kevin Hinks and his team, Thinkorswim, have an outstanding program, 11 to 12 Eastern Standard Time. Check it out right at TFNN. If you haven't test-driven yet, the Thinkorswim platform, it's a professional platform. Retail traders, it's a beautiful thing. Come over to our website at TFNN. You can hit the banner, bring up the platform. They'll allow you to trade with paper money. You can follow Kevin and his team each and every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Guys, it's interesting. Depending on what time your viewers wake up, you could have seen a four handle in crude oil, because it was a little early this morning, but now it's $51 as you get to the 10 o'clock hour in Florida. But early this morning, there was a four handle on crude oil. It just didn't last very long.
No, it certainly didn't. And it's pretty amazing. I mean, when we look at crude, folks, okay, this is pretty, it is what it is, but October 3rd, it was at 76.55. And
true story.
And it's amazing. And Tommy had said this to me years ago, about how does crude move $2 every day when the whole world uses crude?
Right.
Yeah. I mean, and that had to be 10 years ago.
Oh, it's just amazing.
And it's well, guess what? We just moved $20 in a month and a half.
I mean, look how far off the market was. Yeah, a month and a half, when 33% decrease.
It's incredible.
Right. I'll weigh in on that theory, guys. I think crude oil moves more volatile than it possibly should, because you have artificial factors trying to control not only the supply but the demand of crude oil as well. And I think that is what puts more volatility into crude oil. Remember, think of why crude oil rallied to in the mid to high 70s, right? Because Iran's oil supply being pulled off the market.
Yes.
And then when everyone got long, supply went up from other countries, and then Trump gave his little, he gave some passes to some of the people, in terms of crude supply.
Yes.
And now it got flooded the market. So I think there's a lot of artificial factors.
That's a great point, man. I mean, and what's so cool, folks, what Kevin is saying? You can't control the market. The thing that's so cool about a market is that no matter how powerful, whether countries or people think they actually are, you might control it for 4 or 5 days or a week, but guess what, man? The market is bigger and stronger than anyone. Yeah, and that's a good lesson.
Right.
Yeah, that's definitely a good lesson. Hey, Kevin, these notes and bonds, man, it's pretty amazing. It really is. It's this is about, it's going to be amazing, Kevin, if in fact this is going to get as deviant as it did, whether it was 4 years ago or 3 years ago or 7 years ago that each and every time we think that rates are going to keep going up, and guess what? The bottom line is that they stall, you know?
Right.
So
Right. I'll tell you what, yesterday's story, Tom and Tommy, was, Jerome Powell taketh away in October, and Jerome Powell giveth back yesterday. Because what my theory on all of this was, and I talk about uncertainty turning into certainty all the time, right? And how that leads to changes in the market. Well, I think Jerome Powell turned certainty in terms of interest rates in the past into now uncertainty about interest rates and their path. And that's what's letting these markets go back to what? The data. And today's data on personal income and outlays was not inflationary.
Right.
And so you see stronger bonds. And you almost got to a two-handle on the 10-year yield today.
Yeah. What's going to get interesting here is that, I get the Fed fund futures rate up. And, December 19th, it's 82%, so that's just about a given. But other than that, going out, we got March at 38.
Yeah.
And then after that, it's guess what? You're at 22, and that's out to December.
Yeah.
So, and that would make sense, man, because I'm thinking that, if they're going to try to just balance this, because we know it's a tough balance, well, that might be the right number.
That would be 2 rate hikes, right? One in December, one in March or beyond.
Right. And then
in the next 12, 13 months. And
we can handle that.
If the chairman just said we're just under neutral, 2 rate hikes in the next 13 months seems pretty appropriate.
Right.
Maybe.
Right. Yeah. No, listen, that's enough time for people to save cash, enough time for people to get used to it. And that's what I think we have happening here. That, remember, we had talked this about a month ago, too, Kevin. It's going to be a matter of everyone getting used to a slightly higher rate structure, as long as it's not a blowout rate structure.
Yes.
Because time is healing on everything.
Yeah.
That's what it seems to come down to. So.
Yeah, these markets, they're okay with higher rates at a gradual rate. They're not okay with spiking rates and yields. That's what concerns this market. I think that's what happened when Jerome Powell spoke in October. I think you saw a little dissipation of that yesterday.
Yeah. Oh, there's no doubt. And I think what we all can learn on this also is that it just depends. We haven't had a correction in a long period of time. We're coming down. They can say all day long that they don't worry about the markets. Guess what, man? Everyone worries about the markets. The amount of wealth that's in IRAs and everything else, you might not have it in your pocket, but the bottom line is that, that's real.
When you get 10 or 15% pullbacks.
I agree completely, Tom. Yeah. They may claim that, here's our mandates, right?
Yes.
Unemployment and inflation. But Jerome Powell doesn't want his name on that sell-off.
Right.
And he was perilously close to having his name on that. And he doesn't want that.
No, and guess what? From, if you've been around for a while, folks, the bottom line is that when the Fed does get too tight, their name is on it. I remember the first time that I never knew what a punch bowl was, meaning, in the 80s. I go, well, what does that mean? And then all of a sudden when they took it away, I said, I know what it means now, man. You try to go get money, and you can't get any money. It's
two words, irrational exuberance.
Yeah,
and
exactly.
Said, right?
Exactly.
They'll always be known for that.
No doubt. Listen, folks, right here, 45 minutes from now, you understand define risk, options, futures, outstanding show. Kevin, you have a great one, safe one. Have a great weekend. We look forward to speaking to you next Tuesday.
Always great talking to you guys. Thanks for having me.
Thank you. Stay right there, folks. Tommy and I come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrial's down 63. You get the Nasdaq off 39, S&P's off 7. And we're just talking about the Fed minutes, folks, coming out at 2. Now, you can expect, the way Powell was talking, that they had a conversation.
I would expect they did,
Yeah.
and I'd expect, if anything, it's probably just going to confirm what he said yesterday.
Right.
He knows the minutes are coming out today.
Right.
He's speaking yesterday.
Right.
He was pretty adamant and direct in saying we're very close to neutral,
Right.
which is not an ambiguous statement.
Right.
So I'd expect there's at least something there. There's going to be nothing there I would expect to contradict what he said yesterday at
No,
all.
and I guess where the market's going to try to decipher is this, is that there's a range on the neutral, and it's 1%.
Okay.
That's what's really intriguing. You know what I mean? It's like, okay, so we're at the bottom of it. I expect what you're going to see, is that S&P's a negative right now. I expect we're going to go positive. That's the real bottom line. So, natural gas. It's freezing across the United States of America today,
it sure
folks.
is, man. Everything in context, but cold here by Florida standards. Natural gas. We're looking at the January contract. I just want to make sure. Yeah, we're looking at a 5-minute chart. We're trading at 453.6. We've been as high as 465, even at 3 in the morning, backing up yesterday. I mean, just amazing that on a daily basis, even yesterday, right, trading from 440 up to 470 in the span of about from noon until 2. I mean, 30 cents in the span of 2 hours. So we're looking at the 11 a.m. spreads here. We're trading at 453.3. These have 455 as your point where you'd have exposure on the bullish side up to 475. So they're 20 cent spreads. Here's your bullish spread, which is going to be a little out of the money because it's trading right now under 455. And that's costing you 20. Oh, now it's ticking. That's a lot cheaper. No, okay, so this is where you want to, what happened is the
Spread opened up.
Yeah, and the offer just went up. And that's too big of a spread.
Yeah.
You're going to want to wait for that number to come down. Do you see what that is?
Yeah,
I mean, that was
that's
just
important. Right.
Yeah.
They won't sell it.
Yeah, I would not be buying that.
Well, they'll sell it. They'll sell it way overpriced, though.
Yes, correct.
Yeah.
And I would expect that market's going to tighten back up relatively soon because the bearish spread, to put things in context,
hasn't changed.
No, and you're looking at a 4-tick spread from, you can sell it
and be the one risking 40, or you can buy it and be the one.
There it is, just changed.
Yeah, there you go. So yes, you'd be buying the bullish spread. There you go for 20. You'd be selling the bearish spread from 455 to 435. This is the one that has now more than 2 pennies of intrinsic value. The reason why it's more than 20 bucks, you're looking at like 60. I said to ahead of the break,
Good
right?
money.
I said that it's decent premium. So you'd be paying
Particularly because for 11 o'clock.
Yes, you have a half hour is all you have after the news comes out at 10:30. You'd be paying $60. Every $10 is a penny, so you're paying 6 pennies for movement away from 455. Yeah, it sounds like a lot, right? But we just backed it up in 2 hours yesterday. You know, you went from 440 to 470. These spreads have 20 cents exposure. So we'll see where the numbers come out. But interesting to see that a lot more premium than was in this market before it started that heavy volatility.
No doubt.
You used to be able to get into those contracts for like $15 for both sides, and it was still almost a losing trade because
it didn't move.
It didn't move more than a half penny or a penny at most.
Yeah, so look at that movement.
Yeah.
Man. So right now this is a delayed quote, but it's pretty close to the quote, actually.
It is, yes.
451. Let's see this.
There's that huge move yesterday. Look at that. We just looked at the 440 move, but I didn't realize from 4 in the morning it was actually trading at 420. So you went from 420 up to 470 in the span of the day.
Now let's go back to that again, because I actually like this long. It's interesting because yesterday had a high volume spike. So it was the bearish one that was the one that was always the 2 pennies, huh?
I forget exactly
what
it was. So this one, there's your bullish spread, 455 to 475. Now, I pulled this up as the easiest way, but, you know, as I was thinking about it, the noons line up, this is ticked at 450. So this is ticking a little bit. So you'd have 2 options, you know, if you want to go like out of the money type trade, right? That's it. So here would be your bullish because you're slightly out of the money as this is coming. It's almost coming right up to the money, actually. We're at 454.4 now.
Oh, that's good.
Yeah, but it's costing you, you're getting it at 457.
Okay.
8.
That's
So
24.
$2.50, $24, 26 is what's charging you, and you're almost right where you start getting value. You're right at the floor, which is kind of nice. So it's just premium in there.
Right.
And then on the flip side,
so that's 26.
And that's now you could do the same thing bearish. You know, you could go directionally on either way. But what I was going to say is the noon. You're actually not. You're in the money.
It's all bullish.
And this was kind of cooler when it was at 452 maybe.
Yeah.
But you can see you're getting it at 456. So look at the difference here. Just to put it 11 a.m.
Yep.
You're buying at 457.7, right?
Yep.
Versus you're able to get in at 456, but that's because you have to have risk down to 450.
I like that 11 o'clock, I think.
Yeah.
And then give me the bearish one on that, because the bearish one on 11.
On the 11.
Yeah.
Okay.
It's right there, I think. Yeah.
There you go. So the bearish one.
Okay, so now we're
30.
talking 5.6 cents. Okay.
Yeah, $56.
So I figure 6 cents.
Right, 6 cents is what you need away from that 455, which is kind of right where we're trading at.
No, I like that one. You know why? Because what happens is that you still we have 2 cents in the bullish side on that one, too.
Yes.
Right, which is, you know.
Yeah.
Because we had a high volume spike yesterday, so we'll see where this shakes out, folks. But that high volume spike had juice behind it, so, you know. We just might get a nice acceleration up there.
It's quite a market. It'd be interesting to see what happens no matter what with that type of volatility, nonstop.
Big time. And you know the market in general. It's like you get the natural gas up 3%, then you come back down the other side and you get
down
crude
3%.
Down 3%. And you get crude up 1.5. You know, I think what you're going to probably see again in crude though, this is probably another lower low with volume.
The chart's amazing.
Yeah. Because yesterday we started pushing down with volume. Let's see, so you did 800,000 yesterday. Yeah, you're going to have, more than likely, you're going to have a lower low with higher volume. We're at 482 already, and we're just starting the day, man. You know, so this is going to be intriguing watching this whole thing shake out. If we take a look at some of the higher volume equities out here, McDonald's caught a bid this morning.
They did. I think they got an upgrade. They got an upgrade from somebody talking about
look at that.
Investing in their upgraded stores.
Okay. Yeah, benefits from remodeling.
Morgan Stanley, yeah.
Pay off soon, that's what they're saying. We take a look at this. Is this at all-time highs? Might be. Yeah, it's at all-time highs.
Not
Look
bad.
at this. And actually, 1, 2. It's going to be close to an ABC up.
In quite a 15 years.
79 million. Yeah, you were pushing Well, it's not going to do 79. It's 2 days to do. Well, I don't think it's going to make the 79 million. You know, but guess what? They're making money, man.
They sure are.
Boy, it's pretty wild how they could just swing that thing around, huh? Look at this. This is interesting. So their gross is going down, yet their earnings per share is going up. You know, they did 27 billion in 2014. They only plan on doing 20 billion in 2019, but yet in 2014 they made $4.82. Oh, I know what they did. Okay, so they're buying shares back. If we pull that up, there's going to be less shares in the marketplace.
That would make sense.
Yeah.
It's been a
right. It's
quite
like,
a run of
how do you
buybacks.
You're at 770 million right now. That's not that many shares for a market cap out there of 146 billion.
Yeah.
Not bad. Stay right there, folks. Tommy and I are going to be coming back with those gas numbers for you.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is down 100. You get the Nasdaq off 41. S&P's off 8. And let's go take a look at natural gas out here.
So there's your headline number. Inventories falling 59 billion cubic feet. Estimate was for more of a decline, 81. Okay. So a little bit more natural gas than the market expected. And more natural gas equals lower prices.
The opposite way I thought.
Quite a pop. So we're trading at 454. And the market drops basically 9 pennies almost immediately. And what's interesting is you know, those 455 spreads at 11, you could have gotten both of them, both sides for 6 pennies. So you needed 449.
Yep.
Is all you needed, and 6 pennies to this market is nothing right now.
No,
which is interesting.
Yeah, it's.
So we'll follow it, but we're down to 445, and maybe we'll make a run back. And I said to you during the break, I mean, even remarkable, right? We were just down to 420 no time ago. Talking about barely 30 hours ago. So we'll see.
Yeah, because that fundamentally that's a big difference in the aspect that we know. Bottom line, you know, it's cold.
It sure is.
I mean, you know, when we were talking to Teddy Cakestad yesterday, I mean, Chicago's cold, Boston's cold.
Definitely.
You know, there's good numbers out here.
And the winter is young.
And, you know, whatever, there's probably another announcement out here, too, because look at this S&P, folks. We just take
climbing
a look.
to almost positive.
You just take a look at the S&P. You get this pop right here. And it's a good one. You know, bottom line is that when we just started the segment, we're at 27.29. And you're at, look at this.
Yeah, it's almost a 10-point pop.
And guess what? You get 2 minutes into this 10-minute bar, so we get volume behind the move.
We'll put it in context, right?
Yeah.
It scoops up every single bar in terms of the overnight. We just
want.
Yeah.
One bar. Boom. There we go. We're going higher.
Okay.
Let's go take a look at the strength versus the weakness inside the Dow. Point-wise out here, of course, Boeing's going to be the number. Boeing is up, putting 38 positive points. United Health, man, is on a tear. It's pretty amazing. United Health, 16 points. McDonald's, 14, all of the positive. To the negative, you get Goldman putting 22 negative. United Technologies, 12. Caterpillar, 9. Let's go over to Deutsche Bank, DB. So Deutsche Bank, folks, okay, you know, we talk about part of the overhead on a continual basis. I mean, these guys, it just never ends. You know, the low for the year is $9.20. The high is $20.22.
Well, I'd say they're in such turmoil that getting rated is no longer part of the business in terms of their...
rated for money laundering.
Yeah.
Let's see. Activists at Deutsche Bank that promoted a police raid.
Activities, right, at the bank.
Okay. Headquarters took place recently this year. While money laundering suspicions stem from 2016 disclosures known as the Panama Papers, the investigators covered a 5-year period from 2013 to 2018. The main suspects in the probe focused on a unit in the British Virgin Islands that processed $354 million in 2016 alone, where 2 bank employees were not. Oh man, these banks, man. Right, we'll see where it shakes out. Isn't it? You
it's not down much, too. Just in context of what I was kind of chuckling at the break, saying, well, I guess everybody kind of knew that they were in that rough a shape to have your offices raided for criminal activity, and investors say, we'll trade you down, 4%, 5%.
Well, you know what's amazing to me is that the only exposure I think a lot of us have to money laundering and banks is like the movies we watch. You know what I mean? Because you see the movies, whether it's the mob, the drug dealers, whether it's just anything, arms dealers. Okay, you see the movies they come in with, and when this happens, I look, I say, the banks. This is the sad part about it. The banks are so covered that they can do this type of behavior, and no one goes away. This is that, I've seen that last 35, 40 years. And it's like, it's amazing. It's so it's hard to comprehend watching the movie sometimes, and you see what happens in the movies, and then what really happens, it's like, man, that's how covered they are, which is, there's a disconnect. But I guess the real disconnect is, folks, if when you're running the power, when you have all the bread, it makes a difference.
Of course, definitely.
Don't steal a slice of pizza, man. You're going to frickin' jail.
I hear you. I do.
You better. What is it? This is like when I was growing up. I forget. There was a bank robber that was famous, and his whole thing was that you better make sure you go to the biggest banks, and that's how you better do it, because the reality is, if you're going to do this thing small, well, why?
Sure. Yeah.
And it's pretty amazing just watching the whole thing shake out.
Let's take a look back at that natural gas, because we got quite a pop back right to 450. So we're trading at 454, down to 445 almost, and then back up to 450. Still, those contracts we were looking at were 455, so it wouldn't be bad. But if you would...
And the ones we were looking at were the 11 o'clock, so...
They were.
Yeah.
And this might continue. I mean, we've only been six minutes.
Well, actually, I see what's going on here. That 450... Yeah, so the bearish one would have been all right, but we'll see where it shakes out at 11 o'clock.
They were all around 455, right?
Yeah.
It's kind of where, because we were just ticking right around that as the numbers broke.
Right, so you needed 449.
Yep.
Yeah.
Even if you took
To
both
break
sides,
even,
both
right.
sides of the trade.
Right. Yeah.
How about Apple? Can we take a look at Apple? 'Cause
Let's go take a look at it, baby.
they're trading down today again on
Yeah.
some iPhone sale problems again, continual.
Let's see.
One more time.
I think Apple came out and said that they thought that their top phone was doing fine, and I'm not sure what
Let's see,
other
one
people are
second.
saying. Do you know what I mean?
So I had an article, I think. Yeah, so Apple estimates cut again amid fears of sluggish iPhone. So another Wall Street firm, Canaccord Genuity analyst, reducing his 12-month price target to 225 to 250. So, we'll jump back.
There's natural gas popping.
Was it? I didn't
Yeah.
even check. Yeah, look at that. Wow. So down 10 pennies, up 10 pennies. And you can always close out those trades. You know, wouldn't have been a bad trade to close out if you
The short side, yeah.
got your 10 pennies. Because keeping in mind that you don't have unlimited exposure. So you got in, you know, you had 455 down to only 435.
20 cents, yeah, right.
So you had gotten 10 cents of that movement in 10 seconds almost. Just ticking down. Yeah, we'll see what happens with that. Apple.
And you know, I guess the big number will come out. You know, you can see if we just look at Apple for a second, because where do you see this quarter, folks? Okay, this is their monster quarter that they're looking for big dollars.
Holiday season, for sure.
91 billion.
Yeah.
In 90 days.
They just
So
said Black Friday. I wonder how they did, right? All that playing in. Cyber Monday,
that's
Christmas.
it. And guess what? This thing is ticking down quick, man. You know, December 1st is it Saturday? Is it Monday? It's
Saturday, I think.
Saturday. Okay,
Yes.
so we're here.
Yep, the 1st is Saturday.
Yeah.
We are here.
Yeah. Pretty amazing.
Tomorrow is the final day of November.
Final day in November. Until next year.
That's right.
I love it. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials trading down 77. Nasdaq is off 39. S&Ps are off 10. We got gold up 260. Notes and bonds are still the number, man. 10-year note up 6 ticks. 30-year bond up 11. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 119. You get the Nasdaq off 49. S&Ps are off 12.5. And as you come over to our website at TFNN, folks, our man, Mr. Basil Chapman, he is going to be doing a webinar next Tuesday night, right?
He sure is. 5 till 6:30. What's next for the market? He's going to be talking about, so he had a sell signal October 4th, and then just in general, what's next for the market? What sectors are likely to rally? Which need more time coming into the end of 2018, beginning of 2019? You can sign up for that right at the front page. New subscribers get a 30-day money-back guarantee. You can do a month, 6 months, year. They all come with a 30-day money-back guarantee. And should be a good workshop, 90-minute workshop in there for Basil. You can see more of it by clicking on that link on the front page. And I encourage people to try it out. He's got a great service regardless. The opening call, charts, commentary, analysis, trades every morning out there.
Big time.
Yeah.
And, you know, folks, as you're over here, you know, if you haven't heard Steve Dahl on yet on Wednesdays, right? You know, come over and check out the TAS profile. This profile scanner is really powerful.
I agree.
And when you have a market that is this volatile, you want to know where these levels are. You know, I mean, you can decide, and it's very clear. You know, these are cut and dried, clear levels. As you come over and you see the TAS profile scanner, you can click down the bottom, and I believe there's 12 videos, about 3 minutes apiece.
Yeah.
Yeah.
Something like 10, 12, I forget
Yeah.
what it is, but there's a plethora of great videos, and you can see, I mean, this one's only a minute long. They're quick
Yeah.
videos, walks you through each feature, 5 minutes, 2 minutes, 40 seconds, a minute 45, right? 3 minutes, right to the point, everything you need to know. Quick message from Steve of 20 seconds saying hello to everybody. And check out those videos. They give you a great feel, whether you sign up first, sign up, then watch the videos.
Right.
Lots of power in that piece of software. I think if people really get their head around it, it'll be something that they'll want to keep.
There's no doubt, man.
Yeah.
I mean, it's what happens, folks, is that the levels are set up prior to where equities, futures, or currencies are trading, and then you can make your choice. You know, bottom line, bullish, bearish, all of the above. But we have a market that is absolutely a trader's market right now. I mean, this thing.
Definitely.
You know,
and so that would be under, we either have newsletters, right? The TAS scanner is not a newsletter. It's a piece of software under services. You have the Dave White's, the Art of Time of the Trade charts in there. And nice segue, Basil, as well. 2 weeks from tomorrow, I believe, right? When are we looking? Friday, December 14th. What is that? Yes, that's going to be 2 weeks from tomorrow. Pretty remarkable.
Man, oh,
I know. I have to keep checking it. I
ho.
know. It's amazing. December's coming too fast. He'll have a course going on, full-day course. You're going to get 6.5 hours of education from 9 till noon. Take an hour break for lunch, 1 to 4, and then even in there from 4 to 4:30, kind of wrapping things up. And Basil talks about what he's going to be talking about in depth, setting up entry and exits of trades, kind of a full in-depth analysis of what he does on a daily basis for his newsletter. This course having nothing to do with the newsletter, though. Standalone course, all-day webinar. You can check that out, sign up, get in on the action 2 weeks from tomorrow. And if you're really thinking about it, get in there for his newsletter, get that webinar on
both.
Tuesday, and then get in there for the course.
877-927-6648. We got the Dow down 131. S&P's off 14. So this is going to be cool coming into the.
So much for that little bounce. We pulled back.
That's right. No, totally. And there's the. So let me pull this S&P up here. ESZ.
Where did we end up? Phoenix. No, go ahead.
ESZ8. Let's see what we got here. So let's see what we're getting into. I'm going to bring this back here. Okay, this is cool. So you got. Oh, I like this when this happens like this. Okay, so watch what happened here, folks. The bar at 10:30. You know, you didn't break a new high, but guess what? That's pushing highs with volume. So now what you're doing, you're backing down, and you are backing down right into the strength of yesterday. Now that's a sweet setup. So 27.23 is the number there. Meaning, and what that is, folks, is this. That's the high of the strength yesterday. You know, so bottom line is if you're basically trading out here, that would be a place that you could basically get long intraday, get a stop underneath it, and then what you'd be looking for is you'd be looking for the pop going back up to 27.40.
Yeah. And it would make sense because that's, as in to see some strength there. I mean, that's the noon bar. That's the 10-minute bar right on the speech, the announcement from Fed Chairman Powell, and the market taking off.
Right. Yeah. And what you have, of course, we know that at 2 o'clock, the Fed minutes are coming out.
Yeah.
You know, so kind of nice setup here.
I'm just going to take a quick peek back at natural gas, 452, so kind of settling right back almost where we were, which would not be ideal for a volatility trade. But you still have 13 minutes until 11 a.m., let alone some of the dailies we're looking at.
Can you pull up the oil on that?
Yes.
Yeah, because oil, my take on oil right now, we're building cars for much lower price, folks. So, yeah, 51.26. So you can't catch a bid upside. I mean, the sellers are tired right now. They should be. They've already brought it down $25.
Yeah.
You know.
I just tried to even put it on a daily. There's your low, 49.42, quite a number.
Right.
Yeah.
Right. And then, here, let's go over to bonds. Now, where do you see this, folks, in bonds? This is so deviant. So, here's your 10-year. And I want to show you, like, how when things like to break topside, you're going to see that we go back to Monday. Monday we did 3.1 million contracts. That's a monster in the 10-year. The 10-year, when you get over like 2.7 is a lot. The 3 million is a monster.
I mean, just I'll put the bar right at like 2 million, and you can see how many of the volume bars fall below even 2 million.
Right.
Yeah.
Right. Yeah. You know, so you can see Monday someone's buying hand over fist. Now, and I'll show you the 30. Same thing was happening in the 30. Then yesterday you come in with 3 million, 3.08 million. Now, today, you're busting the B point with volume. And that's saying, guess what? 121 is game. And 121, listen, when you bring this up, it's 120.20, which is the August high, which is like, okay, man, rates are going down.
Yeah.
If we go pull up the 30, you're going to see this consistency here. 30-year bond, same setup. You go back right to Monday, you can see that you're pushing with 662,000, and the 30-year bond, folks, you know, you're talking about 300 is a big number. You never mind, you know.
Yeah.
You know. And then yesterday, no, let's see, Tuesday you do 695. Yesterday you do 500, and today you're taking out the B point, and you're taking out with volume. Now this baby here, I think this is a 4.36. Approximately just shy of 4 points, which is going to get you to 143 when the swing high is 145. So when you lay those out, you know, bottom line, if I've seen anything in the bond market that keeps blowing minds, is, as I said to Kevin Hinks a little bit earlier, you know, they've basically buried the bond market in the last 7 years at least 5 times. What I mean by buried is that the whole world, I'm exaggerating a bit, goes bearish on it. But let me tell you something. When you bring this back, what you're going to see is that from 1981, that's when the bull market started. That's when it was $55 or $550 to buy a $1,000 bond that was paying 14.5%. 14.5%. Well, guess what? We haven't broken that trend. That trend is not broken. That trend, I believe I did this yesterday. That trend is like at 123, I think.
Yeah,
133.
Even 128, 133.
128, yeah. It's not broken. The long-term trend is not broken. Free money. No such thing as free money, by the way, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And it looks like Mitch McConnell's going to let through cannabis cash from this is
Hylas hemp, right?
Yeah. So this will help a lot of the farmers. Because hemp, I mean, when I was a kid, hemp rope was all over the place sailing.
Yeah.
I mean, that was one of the strongest ropes out there.
Yeah.
This is now they're into, I think it's medicinal too, right? I mean, they're going to get.
So it's not. Yes, it could be medicinal. It's the CBD part of it, which people will probably hear all the time. Companies including Walmart, Coke have already shown interest in hemp-related products, and if legal barriers to banking, advocacy, that market reached $3 billion in sales by 2022. And let's see. Yeah, well, American hemp was once a common material for everything from rope, there you go, to paper. Even George Washington grew it. Institution of knowledge was lost as law clamped down on cannabis beginning in the 1930s. And yeah, driving demand is hemp extract called CBD.
Okay.
Cannabidiol. It's one of the substances in cannabis, but in hemp, it comes with no mind-altering effect from the THC.
It's pretty cool, man.
Yeah.
And that's, you know, hey, listen, what they're talking about in this article is that in North Carolina, there used to be the big tobacco belt. This could be the big hemp belt.
And there you go.
That'd be great.
So proponents, you know, say it helps relieve pain, anxiety, nausea, and I know that it's a big deal with seizures, right? That type of activity.
Yeah.
Yeah, it should be interesting to see how that
Fiber,
shakes out.
paper, plastics, textiles.
Definitely.
And it's a weed. You gotta love it, man.
Yep.
Stay right there, folks. We got our man Kevin Hinks coming up with his team, Take a Swim. Then we got our man Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. And don't forget, 2 o'clock, folks, the Fed Minutes.
Thanks, man.
Volatility coming at you.
Watch out.
Thank you. Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.